Welcome to Beat the Bell, where we translate what's happening in the markets into what it means for your money. I'm Dominique, and whether you're just starting your wealth building journey or maybe you've been at this for a minute, this is where first generation wealth builders come to get the real deal on what's happening with our investments. So we don't do market speculation here, we do financial education. So grab your coffee or your wine, and let's get comfortable as we break down why the markets are absolutely surging today and what you need to watch this week to stay ahead of the game. All right, so if you're checking your portfolio this morning, you're probably feeling a whole lot better than you did Friday afternoon. Markets are rallying today, and I'm talking about a serious risk on rally. So as I'm recording this the Monday morning, the S&P 500 is up more than 1%. The NASDAQ is jumping 1.6%, and we're seeing gains across the board. So tech stocks, the same ones that got absolutely hammered last week, are leading the charge higher. So what changed over the weekend, you may be asking? Well, the government shutdown is finally getting resolved. The Senate voted 60-40 on Sunday night to advance a funding measure, and Congress is expected to pass it this week. So that means that the longest government shutdown in the US history, which has been 40 days, could end as early as Tuesday or Wednesday. And the markets are absolutely loving this news, as am I. So here's what you need to understand. Markets hate uncertainty, okay? More than absolutely anything else. For 40 days, investors have been worried about the economic impact of nearly 3 million plus federal workers not getting paid, 42 million Americans losing food assistance, and major disruptions to air travel and government services. Now, that we can see that the light at the end of the tunnel is coming. Money is flooding back into risk assets. So tech stocks that got beaten up last week, they're bouncing hard up today. NVIDIA, Broadcom, Microsoft, all the AI names that sold off are finally climbing. Even Bitcoin is participating in this rally, pushing back above 106,000 after dropping below 100,000 last week. But here's the thing. This isn't just blind optimism. This is markets removing a major headwind. When the government reopens, consumer confidence should improve. We'll start getting official economic data again, and that cloud of uncertainty starts to lift. So let's break down what happened last week, why today is different, and what you need to watch for the rest of this week. So last week was kind of rough, y'all. Let me give you the numbers. So the NASDAQ composite fell 3%. That's its worst week since April, when Trump's Liberation Day tariff policy sent markets into a whole tailspin. The S&P 500 dropped 1.6%, snapping a nice 3-week winning streak. But here's where it starts to get real. The so-called Magnificent Seven tech giants lost over $820 billion in market value in just 5 days. So let me break down the damage. NVIDIA dropped 7%, AMD fell 8.8%, Oracle dropped 8%, Meta and Microsoft both slid 4%, Supermicro crashed 23%, making it the worst performer in the entire S&P 500. So what triggered this, you may be asking? Valuation concerns. After an absolutely massive run-up in the AI stock, some major bank CEOs started publicly questioning whether these stock prices had just gotten out of control. When the big money starts questioning or asking questions, the market listens. And technically, the S&P 500 tested its 50-day moving average for the first time since April, and that's an important support level that traders watch closely. So here's the twist. Corporate earnings were actually really good. About 82% of companies beat analyst expectations, one of the highest beat rates in years. And revenue growth came in over 11%. So the fundamentals are still solid. And what we saw last week was profit taking and a valuation reset, not necessarily companies falling apart. The government shutdown reached its longest point in U.S. history at 40 days. Consumer sentiment crashed to 50, the lowest reading ever. And airline stocks obviously were struggling with cancellations. People weren't getting paychecks or food assistance. But over the weekend, the breakthrough came. 8 Democrats joined Republicans to advance that funding bill, and now we're on track to end this thing this week. And that's why markets are rallying today. So let me break down what's happening right now. Airlines are soaring, okay? United Airlines and Delta are up around 2% because ending the shutdown means no more FAA flight restrictions, and that's huge heading into the holiday travel season, okay? And then all of these AI stocks that got crashed last week, they're leading today's rally. NVIDIA, Palantir, Broadcom, all up significantly. Microsoft is trying to snap an 8-day losing streak, which could be the longest since 2011, all right? So even Bitcoin is participating, climbing back above 106,000. And when crypto rallies alongside stocks, that tells that investors are confident again. So this is what we call a relief rally. Markets are pricing in the end of a major uncertainty, but don't confuse this with we're all clear. We still have major tests ahead this week, and that's what I want you to be prepared for, all right? So today's rally is great, but let's look ahead at what could move markets for the rest of the week. First, we have Congress, who needs to actually pass this funding bill and get it to the president's desk. The Senate vote Sunday night was procedural, and it advanced the bill to the next stage, but we need both chambers to approve it, and that could still take a few days. So here's what I want you to watch. If there are any hiccups or delays, markets could give back some of today's gains, but if it passes smoothly, this rally should have some legs, all right? So we also have the CPI inflation report, which is Thursday at 8:30 a.m. Eastern Standard Time. This is the most important event of the week, hands down. And if you don't know what CPI is, let me break it down for you because this matters to your money. So what is CPI? CPI stands for Consumer Price Index. Think of it as the government shopping cart. Every month, the Bureau of Labor Statistics tracks the prices of about 80,000 items that regular people buy. Everything from groceries to gas, rent to healthcare, clothing, and cars. So they measure how much more or less we're paying for these things compared to the previous month and the previous year. So when prices are going up across the board, that's inflation. When they're going down, that's deflation. And the CPI tells us exactly how fast prices are changing. So why does this matter to you? So let me be real. When inflation is high, your money loses value. That $100 bill in your wallet can't buy as much as it could last year. Your paycheck doesn't stretch as far. Your savings starts to get eroded by raising prices. And this is why inflation is called the silent tax. It's stealing your purchasing power every single day. So right now, inflation is running around 3% annually based on September's reports. That means the stuff you buy today costs 3% more than it did a year ago. And the Federal Reserve wants inflation at 2%, which they consider healthy and stable for the economy. So why does Wall Street even care so much? Well, here's where it gets critical for your investments. So the Federal Reserve uses the CPI report to decide what to do with interest rates. So here's how it works. If inflation is too high, the Fed keeps interest rates high or raises them to cool down the economy and bring prices down under control. If inflation is coming down, the Fed can lower interest rates to support economic growth. And interest rates affect everything in your financial life, your mortgage payments, your credit card, your car loans, how much your savings account earns, right? And how much also companies pay to borrow money. They also affect stock valuation. So when rates are high, stocks become less attractive and bond prices. So Thursday's report, the October CPI, drops Thursday at 8:30 a.m. This is the only official government economic report that we've actually gotten since the shutdown. So the Bureau of Labor Statistics brought workers back specifically to produce this because Social Security needs it for cost of living adjustments. But more importantly, this report will heavily influence what the Federal Reserve does at their December meeting. They're trying to figure out, is inflation cooling enough for us to keep cutting rates, or is it too hot, right? So what are we exactly looking for Thursday morning? So we're expected around 0.3% for the month. And that's the overall number, including everything, right? So this core CPI, this excludes food and energy because those prices bounce around a lot. The Fed watches this more closely because it shows underlying inflation trends. And then we have shelter costs. So this is about 1/3 of the entire index and has been stubbornly high. If rent and housing costs start cooling, that's great news for inflation coming down. Okay, so if inflation comes in cooler than expected, right, say 0.2% instead of 0.3, stocks will likely rally because the Fed can keep cutting rates. Bond yields will drop, your mortgage rates could come down as well, and the dollar might weaken. So if inflation comes in hotter, expect market volatility and possible sell-offs, okay? So the Fed might pause rate cuts or even signal that they're done cutting. Interest rates could stay higher for longer. Your credit card rates, mortgage rates, all would stay elevated. So set a reminder right now for Thursday, November the 13th at 8:30 a.m. Eastern Standard Time. This isn't just another economic report. This report literally affects how much you pay for your mortgage, how much you earn in your savings, and how your investments perform, okay? This is your money and you need to understand what moves it. This report could also set the tone for the rest of November and December and potentially influence whether we see that Santa Claus rally heading into the holidays or a lot more volatility, okay? We also have our retail sales report on Friday, November 14th. Assuming that the shutdown ends, we should see the October retail sales report as well. This tells us how much Americans are spending and gives insight into consumer health heading into the holiday shopping season. So given that consumer sentiment just hit a 3-year low, strong retail sales should be huge, okay? All right, so let's look at some of the key earnings reporting this week. So we have Monday, Tyson Food, we have CoreWeave, which is an AI cloud infrastructure company, and Paramount. On Tuesday, we have AMD's Investor Day at 1 p.m. And after NVIDIA's rough week, everyone wants to know AMD's AI strategy. On Wednesday, we have Cisco. We also have Chevron's Investor Day. And Thursday, we have Disney, which is the last major earnings report of the season. So watch for Disney Plus subscribers, theme park attendance, and consumer spending on entertainment. We also have Federal Reserve speakers speaking on Wednesday, okay? We have 3 major speakers from New York, Philly, and also Atlanta. A lot of information coming, long story short, okay? But listen for any hints about the December Fed meeting and what they think about inflation. So let's bring this home to your wallet. 1, don't chase today's rally blindly. Yes, markets are up big today. Yes, it feels good, but remember, we're bouncing from oversold conditions after last week's sell-off. The fundamentals that caused concern last week, high valuations in tech, haven't really changed just because the government shutdown is ending. Be smart about this. If you're adding positions, make sure you're buying quality companies with solid fundamentals and not just chasing momentum. Also, Thursday's CPI report is kind of make or break. I cannot emphasize this enough, all right? Thursday morning at 8:30 could completely change the whole narrative. A high inflation could reverse today's gains quickly. So be prepared for that volatility. Number 3, the shutdown ending is a huge deal. When the government reopens, nearly 3 million workers will start getting paychecks again. 42 million Americans get food assistance restored, consumer confidence should bounce back, and we get official economic data again. So there's a lot of positive momentum that could support markets through the holidays. Also, tech stocks need to prove themselves. So just because tech is bouncing today doesn't mean that the valuation concerns are gone. Over the next few weeks, watch for, can these companies maintain their earning growth? Are customers still willing to pay for all this AI infrastructure? And what does Q4 guidance look like? All right. Also, number 5, diversification saved people last week. So if you were properly diversified, last week probably wasn't super painful. Consumer staples, energy, and utilities pretty much held up a lot better than tech. All right. Now, here's your 3, 2, 1 challenge for this week. So 3 things to watch. Thursday at 8:30 a.m., the CPI inflation report. So set your alarm. Number 2, the Congressional will be voting on the shutdown resolution. Number 3, tech stocks. Do they hold today's gains or give them all back? Next, I want you to ask yourself 2 questions. Am I properly diversified or am I too concentrated in tech stocks? Do I have a plan for how I respond if Thursday's CPI report surprises to the upside? And then I want you to take 1 action, and that's review your portfolio today while markets are up. If you're sitting on big unrealized gains in tech stock, consider taking some profits or maybe even rebalancing. So don't let greed override your whole financial plan. So text me at 202-217-1035 and tell me what action you're taking. I want to hear from you. All right. Now listen, if today's rally has you feeling good, but last week's sell-off had you feeling anxious, that's a sign that you need a better system for wealth building. Real wealth isn't about trying to time market swings all the time. It's about having multiple income streams, understanding cash flow, and building a financial foundation that works regardless of market conditions. That's what I'm teaching in the upcoming Cash Flow Code Masterclass. And this is the exact framework that I myself use to go from paycheck to paycheck to growing into one of the first generation multimillionaires. And this is the system, or one of the systems, that works whether markets are up 1% or down 3%, okay? So in this masterclass, you're gonna learn how to create income streams, build real wealth, and make your money work harder than you do. Isn't that the goal? So I'll drop the link in the show notes for you to grab your free spot. So don't let this whole market volatility control your emotions. Build a plan that works in all market conditions. So let's wrap up with your key takeaways. Takeaway 1, markets are rallying today because the Senate advanced a bill to end the 40-day government shutdown, removing all this uncertainty. Takeaway 2, last week's tech sell-off was about valuation concerns, not broke fundamentals. And today's bounce is literally confirming that. Takeaway 3 is that Thursday's CPI report is the most important event of the week. It measures inflation and directly affects your mortgage rates, savings rates, and investment returns. Takeaway 4, don't chase today's rally blindly. Use strength to rebalance and take profits where appropriate. Number 5, proper diversification protected investors last week and will continue to be critical as we navigate all of this volatility. So before we go, 3 quick things. First, subscribe if this helped you understand today's market action and this week's setup. I break down what's happening every Monday and Friday so that you are never caught off guard. Second, text me at 202-217-1035. Tell me, how did your portfolio perform last week? Did you panic sell? Did you stay disciplined? And what's your biggest question of the week? And I'll be responding to messages all week long. And third, join my Cash Flow Code Masterclass. The link will be in the show notes if you are ready to build wealth that isn't dependent on daily market swings. So thank you for starting your week with me. This is going to be a big week. Stay alert, stay informed, and stay confident. I'm Dominique Broadway. This has been Beat the Bell. And remember, the best investors don't predict the future, they prepare for it.